Stocks in Asia fell Monday following an escalation in the U.S.-China trade war. After Beijing unveiled new tariffs last Friday on $75 billion of U.S. goods, Trump tweeted on Friday that the U.S. will hike tariffs on $250 billion worth of Chinese goods to 30% from 25%. Tariffs on another $300 billion in Chinese products will also go up to 15% from 10%. On Monday, the U.S. leader said that Beijing called U.S. negotiators to say that they wanted to negotiate, following a recent escalation in the trade war. Against this backdrop, Hong Kong's Hang Seng Index led losses as it dropped more than 2%, with violent protests in the city continued over the weekend. The Shanghai Composite lost 1.17%. The Nikkei 225 in Japan dropped 2.17% to close at 20,261.04. Despite the Japanese Prime Minister Shinzo Abe's recent agreement on the principles of a trade deal with Trump. In South Korea, the Kospi fell 1.64% to close at 1,916.31. Australia's S&P ASX 200 finished 1.27% lower, and European stocks closed flat on Monday after Trump said China had called U.S. trade negotiators to resume talks. Initially, technology stocks pushed against regional equities to one-week lows amid risk aversion after another exchange of blows between the United States and China at the end of last week. On the data front, the IFO Institute reported that German businesses' climate index came in at around 94.3 in August versus an expected 95.1. The report reinforced fears that Germany could be headed for a recession after its GDP shrank by 0.1% in the second quarter. Meanwhile, U.S. stocks rose on Monday, with major indexes bounced following a sharp sell-off in the prior session, after Trump said about a possible trade deal with China and somewhat cooled investor concerns. The Dow Jones Industrial Average rose 144.97 points, or 0.57%, to 25,773.87. The S&P 500 gained 17.34 points, or 0.61%, to 2,864.45, and the Nasdaq Composite added 65.86 points, or 0.85%, to 7,817.63. As for the data, new orders for key U.S.-made capital goods rose modestly last month, while shipments fell by most in nearly 3 years. The report could provide the Federal Reserve with more fuel to cut interest rates again in September. In currencies, positive news on the U.S.-China trade war allowed the dollar to regain lost ground, although the upside potential remains limited as traders continue to monitor the inversion of the U.S. 2-year 10-year curve, signaling that a U.S. recession could develop at some point later. Also, the Fed's Powell hinted at a potential rate cut in September or October at a speech at the Jackson Hole Symposium, which adds to factors restricting the bullish potential in the U.S. dollar index. Anyway, the euro-US dollar slipped from mid-August highs around 1.1163 to the 1.11 handle on Monday, and remains at the psychological level early on Tuesday. The pound sterling US dollar also turned negative after another failed attempt to challenge the 1.23 figure. Meanwhile, the US dollar Japanese yen briefly dipped to lows at around 104.43 and then recovered to 106.00 amid a broader recovery in the dollar. In commodities, Brent crude was trading in a volatile manner. After a rise towards $58.50, prices slipped back below $58 through and managed to rebound to $58.25 afterwards. The unsustainable path in oil prices shows traders remain sensitive to trade-related headlines. Meanwhile, Baker Hughes on Friday reported that the number of active U.S. rigs drilling for oil declined by 16 to 754 this week. That was the biggest weekly decline since late April, when the company reported a weekly drop of 20 oil rigs. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.